The US unemployment rate for September is out tomorrow, along with US non-farm payroll figures. Joining me ahead of the results is Lien, Managing Director of FX Strategy at BK Asset Management. Hello, Kathy. US unemployment currently stands at 8.1%. What do you think we can expect to see in tomorrow's data release? Can we expect a further decline?
I don't think we're going to see much improvement in the unemployment rate over the past month. We will probably see another jobs number that is around 100,000, but the decline that we've seen in the unemployment rate hasn't been in line with what we've seen in the non-farm payrolls report. So I think that you're going to start to see more of a move in the same direction, and I think that the non-farm payrolls report needs to catch up with the unemployment rate.
What strategy do you think the US Federal Reserve can deploy to combat unemployment?
The Federal Reserve has already implemented a strategy to combat unemployment, and that's basically that big move that they announced in early September, which is the third round of quantitative easing, and they basically committed to buying unlimited amounts of bonds. Now, of course, that may not be enough, and they did say at the last FOMC meeting that they have other tools at their disposal, and that, is things like considering buying different assets or considering, pegging the unemployment rate to or interest rates to certain pieces of economic data like unemployment, but I don't think that they're going to push forward with another move so quickly after having done one already.
US non-farm payrolls currently stand at 96k. How important do you think Friday's release of US NFP figures will be to the global markets and investors, and what can we expect?
Non-farm payrolls is traditionally the single most important piece of U.S. economic data on the calendar, and I do think we'll probably see the usual type of, kind of volatility and reaction from the NFPs that we have, which means probably a bit of a spike and then some volatility around the first half hour. But with that in mind, I don't think that the volatility is going to last, because if you think about it, the non-farm payrolls report, at least this non-farm payrolls report, is not going to change the Federal Reserve's minds about anything. They're not necessarily going to react to either strong or weak NFPs. If non-farm payrolls is strong, they'll still think that it's only 1 month of improvement, and they'll need to give the quantitative easing more time to filter into the economy. So they may be slightly optimistic if we have a good number, but they're not going to stop buying bonds. If the number is bad, they're not necessarily going to initiate a different program of stimulus. And the reason for that is they'll also still feel that the quantitative easing needs to filter in the economy, that, perhaps 1 month or 2 months forward we'll have a much better non-farm payrolls report.
And what do you predict will happen next from a currency perspective regarding the strength of the US dollar?
I think that we're probably going to see a little bit more dollar strength before the dollar kind of engages in a longer-term downtrend. And the reason for that is because I think there's still a lot of uncertainty around Europe. And as much as we like to say that what's happening in the U.S. is more important, the European sovereign debt crisis, I think, will exacerbate as people try to focus on whether or not Moody's could downgrade Spain or whether or not Spain actually asks for a bailout. So I think we'll probably see a little bit more risk aversion, but once Spain actually moves forward, and I do believe that they're going to ask for a bailout, then you're going to see that uncertainty lifted, which will allow the risk currencies to rise and safe haven flows to move out of the US dollar into the euro.
Thanks for joining me, Kathy. Well, that's all we've got time for right now, but stay tuned to Dukascopy TV for more updates and interviews. For now, though, goodbye.